Hello everybody, this is Toni Turner and welcome to the market now as of the market's close on Friday, December 28th. Before we start, from all of us at Toni's Market Club and ToniTurner.com, from our families to yours, we wish you a healthy, happy, and very prosperous new year. And now on to the market. Well, U.S. stocks closed down slightly today. The final week of 2018 has seen wild swings in equities, starting off with Wall Street's worst ever Christmas Eve drop, followed by the Dow Jones Industrial Average's record 1,000 plus point surge on Wednesday and a stunning rally on Thursday. And now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 ETF, again, the SPY. Last Friday, we talked about the SPY attempting to hold support at about 244, about right here. And that didn't happen. The benchmark fell to lows of $234.27 on December 24th, right here. That's about $23.42 on the S&P 500 itself. Now, when the market reopened this past Wednesday, the green candle, the SPY held that level, thank goodness, and rallied for the past 3 days, today closing at $247.75, again at about $24.77 on the S&P 500 index. Now, as we talked about a week ago Friday, the RSI, the 14-day RSI here, fell dramatically into oversold territory here. That may have had something to do with it, although that happened earlier in October, and while the SPY rallied, it didn't rally very strongly or for very long and quickly fell down again. Although this time, this rally seems a little bit different. We know a lot of people were selling short into this big move down that we watched several days ago. And of course, with so many people, so many traders short when this market did start up, it caught a lot of them by surprise, and a lot of this move up is a short squeeze. Now, though, we'll have to see. We said last week there might be an oversold rally. There was a very, very exciting and dramatic one, and quite a wild ride. So now, if the market, this could be, when you see 3 days up like this, the first day, of course, was huge. That was Wednesday, the day after Christmas. Then Thursday, the market fell down a little, but then continued higher. And again, the SPY held to close today at 247.75. Now, this red candle, meaning that the buyers couldn't hold this up to close at the high today. So we will have to see if this is going to be a topping pivot. We'll have to see if the SPY is going to pull back in the coming week. If it does, it really needs to stay above these lows at $234.27. We can just call it 234. It needs to stay at this low to get positive again and to hold these lows at 234. Now let's go back to the basics here and remember the definition of an uptrend. An uptrend is when price draws a series of higher lows and higher highs on a chart. So in watching the move in the coming week here, if the SPY doesn't continue higher, if it starts down, again, we definitely want it to hold above 234. If it needs to retrace all the way down, fine, but it needs to hold here. A better scenario would be for it to come down and somewhere pull back if it has to do that and rally here and make a higher low and then start up. That would be a much more bullish signal. So we'll have to keep an eye on the SPY and see if it can hold here. If it cannot, then again we have to stay extremely conservative. And for some folks that even means, and it's fine, staying on the sidelines. Our next chart today is the Invesco QQQ. As you all know, this is the exchange-traded fund that closely follows the NASDAQ 100. Now, like the SPY, the QQQ also did a face plant on Christmas Eve right here, moving down to its lows at 143.46. That's right down here. This was Christmas Eve day. It fell to its lows of 143.46. Then again on Wednesday, Thursday, and Friday it rallied and closed today at $152.97. Now, it needs to, and by the way, it's escaping bear market territory now. From the all-time closing high up here, it's now down at this number at 152.97. It's down about 18 cents. I'm sorry, 18% off of its all-time highs, and of course 20% off its all-time highs, which it fell to earlier this week, meant it was in bear market territory. It's managed to escape that, at least for the moment. So now, like the SPY, this needs to stay above support levels established this past Monday, Christmas Eve day, at 143. And if the QQQ starts to pull back here, it needs to hold 143 to hold a chance of starting to move back up and rally and move back up in an uptrend. We need a higher low would be great, but certainly not moving below or closing below 143. So we'll have to stay tuned to the momentum stocks that drive the QQQ, the big guys like Microsoft, Intel, Facebook, Google, Amazon, Netflix. Those guys, we have to keep an eye on them to see if they can hold, if they can start higher here, and if they can keep the QQQ above 143. Now please, again, as I said last week, remember, when in doubt, get out, especially in markets like these. You can always buy a position back, and who knows, maybe January will offer us a more positive market. For our third chart today, we're going to look at a daily chart of the Healthcare Select Sector Spider Fund, the XLV. Top components in the XLV are Johnson & Johnson, Pfizer, United Health, Merck, AbbVie, Abbott Labs, and Amgen. Now, the XLV has fallen, as you can see, dramatically with the rest of the market, making a low of $80.65 this past Monday, then, like the rest of the market, rallying and closing today at $85.25. Now, if we look left on this chart, we can see that the XLV has had prior support at $80 and $81 dating back into March, April, and May of this year. So 80, 81 has become key support levels for the XLV. Now, in September of this year, note up here, the XLV made one high up here at about $96. Then it fell down to about 87 and rallied back up here to almost 96. This pattern here created a double top, and of course that double top looks like an M. And then it came down and fell through support here. We're going to call it 87. So when it fell through support here, this created a double top. Now, logic, and coincidentally, it stopped right here and gained support of the 200-day moving average before it moved back up, made the second top, but the next move down in this month, it could not hold that 87 zone. Excuse me. Now, if we look at a measured move here, we know that there's about a 9-point spread between $96 and $87, right? A measured move means that if price creates a top reversal pattern like a double top, then it will it is supposed to repeat that move to the downside once it breaks through support. So what it did do is it fell from 87 down to almost 80, about 7 points. This was a 9-point move. This was a 7-point move. I'm not going to get picky here, These prices do have a little leeway in them, but I'm also going to, given the market's fickle and volatile mood, I'm going to remain cautious and I'm going to remain patient. I'm going to watch the XLV in the coming week. For me to go long, it needs to stay here above this high at $80.50. I mean, above this low, I should have said, at $80.50. This could be this move up here where it closed lower than it opened today. This move here could signal, especially since it's moving into resistance from back here from this low, it could signal a topping move. It could be short term, could be longer. We have no way of knowing, certainly especially in this market. But I'm going to watch it, and here's the patience part. I'm going to watch the XLV and see if it does pull back here, if it pulls back to somewhere around 82, 83, or 84, and then rallies higher, and yes, this takes patience, I will then buy a small position, perhaps, depending on what the market's doing, with a stop at 80.50 at the very lowest, or perhaps even a little higher if it just drops back to, say, 83.50, 84, and then rallies up. I may move my stop up to 81 or so, and then see if it can continue to rally higher. Of course, a more conservative strategy here, since these moves are so volatile and we never know which way it's going to go right now, is a more conservative move is just to watch the XLV here and see if it can gradually carve a base out, again holding above 80.50. And if it can do that and just continue to move sideways here and perhaps start higher, we could spend a few more days watching it and then perhaps enter a little later on. Again, remember, cash is a position, and in markets like these, sometimes the best strategy is simply to keep our mittens off the keyboard. And now for the coming week's economic reports, but first, please join us this coming Monday, December 31st, for our next session of Toni's Market Club. If you're not sure how to approach the market right now, let us help. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, no problem. The recording of our session is available just a few minutes after the session ends to all of our members. For more information and to join, go to tonysmarketclub.com. And now on to the next week's economic reports. Nothing on Monday. On Tuesday, the market will be closed for the New Year's Day holiday. On Wednesday, we have the ADP employment change. That comes out every month. Thursday, we have our usual weekly jobless claims, the ISM Manufacturing Index, and auto and truck sales. On Friday, we will get the monthly jobs numbers. That will be watched, and our usual oil and natural gas inventories that have been delayed for a day or two because of the holiday. So again, please join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, Happy New Year. I'm Toni Turner, and this is The Market Now.